Thank you, and such a pleasure to have these type of discussions that make you think, that make you, be creative and boost your creativity in ways that only events like Webit can do. And there are so many others, but I'm so proud of the Webit team, the curation of the second day and overall of this amazing Webit Global Impact Week, and having all of you, the phenomenal over 500 speakers and moderators and over 100,000 registered people from literally each and every country in the world. And now saying country, and I was thinking different places, continents and regions. Let's talk about this now. Let's have a talk on how venture capital flows these days, and do we see a different type of dynamics or the so-called rise of the regions? Do we see VCs and money flowing in different directions? Because we already know that US is the place for VC and for investments, and obviously attraction for global talents. But is this changing? Let's ask this question and have Michael Cogley from Insider ask some really great panelists. Michael, the floor is yours.
Hi there, and welcome to Rise of the Regions, a fireside discussion on the changing ways around venture capital. The past 2 years has accelerated a vast array of changes in the sector, not least of all in virtual fundraising, which has led to vast amounts of capital going into Europe, into Central and Eastern Europe, into Asia, into Latin America, and into Africa. My guest today is Hendrik Brandis, who through his venture capital firm, Earlybird Ventures, has backed an array of European tech companies that have proven that the block can produce giants of its own right, not least in the likes of UiPath and German challenger bank N26. Hendrik, it's an absolute pleasure to have you on. I'd like to maybe start by asking you to speak a little bit about your own background and why you've gotten so focused into tech investing.
Yeah, thank you. First, and thank you very much for having me, and I'm honored by the invitation. As far as myself is concerned, I'm an aerospace engineer by training, spent my first professional life in that area, learned a little bit about management while being with McKinsey afterwards, but always had the wish to become self-employed at some stage of life, and that led then to the decision back in '97. So that's 24 years back. It's embarrassing to say that it's so long already. We decided to get Earlybird going, my founding partners and myself, and since then we're doing it. And Earlybird has managed to survive all the crises in between and has grown and is developing well.
I suppose that you've gotten through a variety of crises, not least the pandemic that has been going on since maybe March of last year. And that, how substantial do you think the changes have been from that for VC investing and also for startups trying to attract investment over the past period?
I think that the pandemic for our industry has rather been an accelerator. For many things. We are predominantly investors in digital technologies and in health. I think both areas have experienced a boost through the pandemic. On top of that, we see an increasing virtualization of work in teams, which has a significant impact on our industry, much more than I think the broader public is discussing, because it leads to what I call the rise of the regions. While 10 years back, we allocated north of 75% of our funds within the main tech clusters and hubs, London, Berlin, Paris, Munich, what have you, Stockholm. That percentage has fallen below 50% in the decade, and we see an accelerated decline in the recent years. And that has to do with the fact that the inherent advantages of the clusters, where you have this cross-stimulation of teams, and the center of competence, competence driving more competence. And these clusters have gone virtual and have gone into the cloud, and that enables capable founders from everywhere to start and found fantastic companies, which has been much more challenging in the past. I mean, take you were mentioning UiPath, and UiPath coming out of Bucharest. I mean, for sure not a well-known tech cluster of Europe, but out of Bucharest, there has been, the world global market leader for robotic process automation created. It's amazing, and we see more and more of that.
Can I ask it's interesting to hear you talk about kind of the region specifically kind of starting to increase in terms of their own value, because a lot of what's talked about is kind of, I suppose, the concentration of capital moving from Silicon Valley in the US into maybe Central Europe more generally. But like you say, we just talked about UiPath. I mean, is there any particular cluster or areas beyond or regions beyond those clusters that are going to start really thriving? I mean, do you see Central and Eastern Europe starting to really improve over the coming years?
I think the whole story is that it's a declustering. So it's not so that it's not even so that the existing clusters are losing relevance or losing momentum. It is so that the regions, wherever you are catching up. So the true bottleneck for disruptive innovation is becoming basically the smart mind. And as a matter of fact, 85% of smart minds are not in the clusters. So if we had a situation where 75% of venture capital went into the clusters, and only 25% in regions where 85% of the smart minds are sitting, that was a severe imbalance. And through the virtualization of work and teams and networks and knowledge centers and what have you, this imbalance is starting to balancing out. Evening out, and through a catch up of the regions, and this is why we see so much momentum in with respect to disruptive innovation in terms of growth. We still have probably in absolute numbers most startups in London, Paris, Stockholm, Berlin, and what have you. But if you look at the dynamic situation, growth, regions are by far outpacing the clusters. Same thing, by the way, in the US. I mean, in the last 10 years, venture capital investments in Miami have grown, 20, 25x, as opposed to Silicon Valley, where venture capital investments grew 4x.
And can I ask that growth, is that being driven by kind of investors in those regions, or is it being driven by, in your mind, kind of US investors coming across and backing it, or existing long-standing European investors, or is it a mix of all of them?
Okay, if we now take the perspective again on Europe, it's interesting to see that so the European venture industry is coming from a situation where $7-8 billion have been invested annually 10 years back. That has grown to something like 20 billion in 2015, and up and until then, that growth of 3 to 4x was basically supported and carried by domestic investors, by growth of the inherent European venture industry. Since 2015 and 16, we have seen a further exponential growth, and we may face a situation where we will be seeing close to $100 billion being invested in 2021. So this additional 5x growth has now been driven by international investors, because what you can see is that the European venture industry has not significantly further grown above the 20 billion annual fundraise, which we had in 2015, 2016. So the last years, I think the stunning growth of European venture investments have been largely driven by international large pool of capital pressing into Europe.
I mean, one of the criticisms of Europe had been in the past of whether it could create these massive tech companies that could stand on their own 2 feet without having to rely so heavily on the US. But there's already a couple in your portfolio that have kind of proven that already. But do you think it has the potential as a region, I suppose, to go off and create tech companies of the scale of a Facebook or what have you?
I'm more than sure. I'm absolutely sure. One thing is quantity, and then is at the end of the day, the scale and the quality of the success cases. Let me first talk about quantity. If you look at the cumulative number of unicorns being created out of the European venture industry, that number has been in the last decade. I'm just talking about last decade. Up until 2020, a little bit more than 60. We currently have counted more than 90. We have not even concluded 2021. So we may see a growth to 100, 110. So we almost had, I don't know, anything between 40, 50 new unicorns in just 1 year, 2021. As opposed to 60 in the 9 years before, or 10 years before. It is really, really exponential growth. That's one aspect. If you then look at the number of decacorns, so next level, we count 5. 10 years back, even 5 years back, we had none. Started with Spotify and others, and so I do think we see an exponential growth. But the large amounts of capital fueling this industry, we will also see. I don't know what is 100 billion. Decacorn is 10 billion. I don't know what 100 billion I call it. Centacorn. I don't know. We will be seeing.
You can patent that.
Unavoidably, it will come because the true differentiation or the true driver are the smartness of technological concepts and the smart brains standing behind those concepts. And I do not believe that Europe is here inferior. At the very end, it goes back to the to the educational system and whatever level, the average level of education. And that's pretty good in Europe. So Europe in that regard is pretty competitive. And I think for the first time, we're starting to play on a level playing field, because the inherent disadvantages which we had, no clusters, not enough money, we can make that list up, which has, I think, prevent European tech startups to be really competitive with what we see basically in the US. I think these inherent disadvantages are fading out. We have now these 100 billion venture investments coming into Europe, and we see the aforementioned declustering situations where not being in Silicon Valley is less of a disadvantage than it used to be.
I suppose moving on then and to talk about the types of these companies and the types of innovations. I mean, what are in your views, what are the most important ones coming through that really needs venture capital to thrive and that are worth supporting?
Okay, I mean, we all know about the buzzwords of new platform technologies, being new space and quantum and AI and AGI and whatever. I try to take a little bit more fundamental perspective on that, and I think they're basically true critical areas of innovation, which I think needs really significant venture funding. One is energy production or generation or energy, because disruption and innovation is necessary to save our world. I'm convinced that climate change is an even bigger problem than it is perceived in the public or in the broader public. So, and then the only way to solve it, in my eyes, is going to be with technology, disruptive technology. So I think this is really a key task, and the other key task is in the area of knowledge. So all other so all the knowledge in the sense of AI, AGI technologies, which will, I think, further disrupt our way we work, we produce things to an extent which we probably do not imagine right now.
I suppose on those themes, is there anything that you've backed recently or anything that's been particularly exciting for you in those areas that you picked up on?
Yeah, definitely. I mean, one thing, one company which pops up into my mind is we co-led the Series A of Alabaster. It's an AGI, artificial general intelligence company out of Heidelberg. Basically trying to compete with OpenAI in the US. I think very, very interesting space, enormous potential. I think these AGI systems have potential to potentially replace prospectively 50% of all white collar work globally. I mean, just imagine what that would mean if that is actually true. We're currently looking at potential engagement, which we have not yet closed, so I can't really name the company yet, but we're looking at a potential engagement in the area of nuclear fusion, which is absolutely disruptive for the energy generation market. Lots of risks, but unlimited potential. Maybe just to name these two.
Yeah, of course. I think one of the big focuses of the Webit Impact Week is kind of what tech can do from a societal perspective to develop a clean and protected environment. I mean, you've kind of spoken about it at length in terms of energy creation as well. But can I ask, what do you think are the best ways to make sure that kind of clean tech becomes more accessible and more affordable, but also more recognizable to consumers as well as investors?
What I think what is important on the highest level is that we understand that the only way to rescue the world is disruptive technology for generation. So saving energy will not do it, and the reason why is that developing countries are not yet on the same energy consumption level as we are, by far not. And we, I think, have not in good arguments, cannot be justified not to grant them the same access to energy as we have. Even though if we would drive down a little bit our energy consumption per human, we will still see a rising energy need globally because of growing population and a growing energy need per human in the emerging countries, and this is unavoidable. So the only way, so we need to find an answer. How do we provide global energy 100% CO2 free? And if you look at this, and if you look at the figures, it will become clear that renewables will not do it. It's good. It will help. It will reduce the task, but it will not do it. Right now, I think global energy is covered 11% by renewables. Same figure was 8.5% 10 years ago. That gives us a sense how slowly we are moving in the area of renewables. And even if we double or triple the speed of expansion of renewables, which is very, very difficult to do, by the way, because the vast majority of renewables is actually coming from water, not from photovoltaic or wind. We will for sure not cover more than, somebody is saying 20%, others are saying up to 40%, but that's the highest number I ever heard. But we need 100% by 2050, 100%. So there's absolutely no way that renewables will solve our problem. And that's also the source why we have now the renewed discussion about nuclear fission. And I don't know whether this is going to make it, because getting societal consensus to again invest in classical nuclear power plants, I'm not so sure. So I think the open gateway to rescue our world is technological innovation. And I think there we as a community, as a venture community, as a tech community, can provide significant contributions. And for me, it is so important to rise that to make that understood by everybody. It is not enough to ride your bike, drink local water, and avoid plastic bags. It's simply not enough. It's not solving our problem. The problem is way, way bigger.
From the venture side of that particular point then around kind of renewables and sustainable businesses, is there anything venture investors can do more of? I mean, we're starting to see the rise of sustainability clauses that are put in, deal sheets and term sheets that, if you're going to take our cash, you have to make sure that your business is sustainable from day one. I mean, is that also part of the not enough bucket, or is it kind of reducing the task, like you say, like electric vehicles and whatnot?
And everything contributes. So we're doing this. We putting in respective clauses in our investment agreements. And there's some CO2 effect in it, but even more importantly, I think it contributes to rise the awareness and of the problem we have. It is important. The only thing what really matters to me is that while we're rising the awareness, we need to make clear that with the traditional measures which are publicly discussed, say local water, train instead flights, and or bikes instead cars, this is not enough, and this is by far not enough. This is good that everybody take care, and we demonstrate that we take care, and we shouldn't stop there. We need to go way beyond, and we have to be committed to find disruptive technology, and the candidates are there. It's not so this is hopeless. It is absolutely doable. But I must say, I'm really upset. I can't say that I'm astonished. I'm everything if I see that disruptive technological candidates, which have the potential to actually rescue the world, that these technologies have actually funding challenges. I mean, knowing about the size of the issue, funding should be the last problem these disruptive technology initiatives should have. I mean, the damages through climate change are so enormous that everything what we invest into these new technologies is pocket money. But even that pocket money is only hardly available. And this is something I think we have to work on, and we have to talk to politicians and raise the awareness that let's throw money on what can rescue the world.
Yeah, most definitely. I appreciate we're quite tight on time, so I'm just going to ask one very last one, just to wrap up. I mean, I'd like to ask what your thoughts are over the coming decade. What are your big predictions for VC? I mean, one of the big changes we've seen is Sequoia changing its fund structure, and they're going to hold on to their investments a little bit longer. I mean, we're seeing a lot of that. We're seeing the long-term patient capital come into the sector more. I mean, what are your thoughts? What do you think is going to be kind of the big changes over the years to come?
Yeah, I mean, this is impressive to see what Sequoia is doing, and I think it does make a lot of sense. And I think the industry will observe what they're doing, how they're doing, and probably partially adapt and follow them. I think the general trend is we see a professionalization, sophistication of the industry. We are much better in assessing risk and awards. That goes along with a reduced cost of capital, and the reduced cost of capital means simply higher valuations. Tiger Global, SoftBank, and the like pushing into that direction. So I think we will be seeing more of that. Another big trend is that I predicted an ever accelerating pace of technological innovation. So, I mean, I have said that many times. Back in the 80s, 90s, we had every 10 years a new platform technologies, PCs, internet, what have you. We now see new platform technologies emerging every 2 to 3 years, and each of them are as big as the internet. So, the breadth and the size of the pool of innovation is just exploding. And this is why the exponential growth of venture capital investments is for me is nothing which makes me afraid, because I think this is simply what we need in order to fund this enormous pool of potential technological opportunities coming towards us.
I couldn't agree more on all that. But unfortunately, that's all the time we have. I'm afraid I would have chatted to you for much longer. It's been an absolute pleasure, Dr. Hendrik Brandis, a co-founder of Earlybird Ventures. That has been an absolutely fascinating discussion for me personally, and thank you all viewers for following along. It's been a real pleasure. Thank you.
For decades, Silicon Valley has acted as the home place of the world's biggest tech companies. But increasingly, VCs are starting to look further afield. Remote working has unlocked geographies that were once snubbed by investors who are typically kind of penned into investing in companies that they'd met in person. Investors are now seeing the potential to invest beyond the US. In Europe, we've seen the rise of Klarna and Spotify, while in Asia, China's ByteDance has established itself as one of the most crucial parts of the social media industry. The result of all this is increased levels of record levels of VC cash in the likes of Central and Eastern Europe, Latin America, Africa. And with this, I'm delighted to welcome you to The Rise of the Regions, a discussion on how tech investing is undergoing rapid change. My name is Michael Cogley. I'm the Associate Tech Editor at Insider in London, and I'm delighted to be joined by Sonny Vu, founder of family office Alabaster that works with VCs, but also the CEO of startup Arrivo, and Gen Tsuchikawa, the corporate vice president of Sony and the head of the company's venture investing activity. I'd like to start by asking you both maybe to talk a little bit about your own background and your own thoughts on VC, and also from Sonny's perspective, the entrepreneurial perspective as well would be fantastic. Can we start with Sonny, please?
Yeah, so I've been an entrepreneur all my life, started and sold a number of companies, did a natural language processing software company in the late 90s, sold it to a search engine, did a medical device company for serving the diabetes community. And then Misfit, which is a wearables tech company. And we sold that to Fossil. And so it's been a good run. It's been a lot of fun starting and building and selling companies. And then, we tried our hand at investing. We started a small family office after the last big exit called Alabaster, where we focused on climate change reversal deep tech. So, crazy moonshots that probably won't work, but if it does, then it has a needle changing potential for planet level impact. So that was a lot of fun. And then in connection with that, we ran a couple of scout vehicles for VCs in Silicon Valley. And that helped us get into various deals. Did 35 investments there. We're still investing. That was a lot of fun. And then have just been getting back into an operating role here at Arrivo, which is an advanced manufacturing technology company. And indeed, all of these companies, the companies that we've invested in, the investors, all global. Everyone's everywhere. It's not like we just did Silicon Valley or whatnot. And in fact, the VCs that we worked with were interested in working with us because of our global presence. I was mostly in Vietnam, so a lot of Southeast Asia exposure, and I have a close affinity to Israel, so a lot of stuff in Israel. So it's been a lot of fun, and but it's definitely it's an odd situation we're in now in the pandemic world. I can't say we're post-pandemic right now because we're still in the midst of it all, but everything seemed to be very global, and all of a sudden, it's like, okay, well, maybe we are deglobalizing because of all the restrictions. And so I'm looking forward to the discussion we're going to have around that.
Thank you very much, Sonny. Again, going from kind of family office investing to kind of corporate VCs, can you talk me a little bit about your experience today and the lead up to where you are now?
Yes. Hi, I'm Gen Tsuchikawa, calling in today from Tokyo. And let me just want to thank for allowing me to participate in this session. We're one of the pretty active global CVCs. We've made over 100 investments over the last 5 years. We have teams in US, Europe, Israel, Japan, and India. And we also work together with hundreds, if not thousands, of Sony experts in various areas. We are one of the companies testing a new model, which is to manage a GPLP fund with financial investors and with a close backing of Sony. We have a strong conviction that this is the right path and planning to expand on this path. Looking forward to the discussion today.
Thank you very much. I suppose just moving on, we've talked a little bit about kind of the pandemic that has happened, and I hope from both of you guys we're going to get quite different perspectives as to how it has impacted various parts of funding. From your perspective, again, maybe we can talk about how the pitching process has changed, and then maybe Sonny, once we get to you, we can talk about the idea behind raising cash and how that's kind of dramatically changed for startups as well. And again, if we could start with you and maybe talk through your experience in terms of what's happened over the last 1.5 to 2 years, that'd be great.
Well, like everyone else, we've had our surprises. And last March, the March the year before, seems like the world was ending, but we ended up being quite active in this in all throughout this time. And so I used to take 3 business trips a month, and which I have not taken in over 1.5 years now. And but so we rely more on our global teams to come up with the right candidates and the right decisions. And we just so I probably spend time with my US colleague and European colleague at least once daily to go through a lot of the new deals that we're chasing. So that has really changed. I think we can say that we've some of the firms have really downsized their opportunity, but we've remained very active, and I think the ties between our team actually has gotten stronger.
Can I ask you, do you miss the business trips at all, out of curiosity? Or are you very glad that you don't have to do those long hauls anymore?
Well, it's a great question. I mean, I'm not sure I can immediately go back to the 3 business trips per month life, but I think it was I think the one global team building that we've been working so much before the pandemic, that has really helped us because we can really trust and believe in our global teams.
And in terms of the investing, obviously you guys have accelerated the amount of companies that you're backing. How has the pitching process changed? And do you think that the kind of virtual system that I presume you've been relying on for the last maybe year or so is better, or not as good as meeting people in person?
Well, like for instance, let's talk about autonomous driving. I mean, really being on the vehicle and experiencing it, and having, let's say, 4 or 5 investors be on that, having gone through the same experience and discussing if we should invest or not. We don't have that. But I think we've been working and looking at so many different companies in the past that I think the collective wisdom there and the trust we have in the team member that is in the region, I think that's how we're making decisions. So if you ask me, is there more knowledge by being there? Yes, that is absolutely true. But I think we've come through a path of really meeting so many companies before the pandemic, so that I think frankly, I miss going back and meeting and shaking hands and really getting a real sense of what's going on. And so I plan to be back. Japan's numbers are down, and so I'm hoping we get back together.
Yeah. And I suppose, Sonny, from your perspective, then it's the inverse. It's very much the raising of cash. Can you talk to me a little bit about, what that's been like during the pandemic period?
I found it to be much more efficient, to be honest. I think I've been joking with my friends that I'm pretty sure the pandemic has, if anything, uncovered one large global conspiracy, and that is that businessmen and businesswomen, in fact, don't need to travel. And really, they're just traveling because, I don't know, I mean, the difference between 3 trips a month and 2 trips a month, that's a big deal, but there's a massive difference between 1 trip a month and 0 trips a month. And so just the chance to get away and have some space, it's actually, I think a lot of people like that. But all kidding aside, I think when it comes to on the investing side, very, from our family office, it was very efficient because we just, just had back-to-back meetings, or we can block them all since this is not a full-time thing that we're doing now, and have a number of pitches and meetings in a 2-3 hour block at a time. Very efficient. And the entrepreneurs are okay with it, like, doing that. The on the pitching side, much more, I think a lot more efficient, in the sense that it's not so much you can get to more investors. It's not like, oh gosh, we're going to meet with 100 different investors and we're going to pitch them all in a 3-day period. That doesn't happen. You generally do like half a dozen, or I don't know, maybe a dozen or something like that. And these are very special meetings. But I think the main thing is, you can be in a comfortable space. You have like a distance that actually can help in many cases. Now, in turn, when it comes to due diligence and on the ground things, especially for a company like ours, where we're an industrial technology company, advanced manufacturing technology business, people need to come see stuff. So that comes with some challenges in terms of in person, like, okay, please check out the robots and the lasers, but keep your masks on and stay away from me. So there's a few challenges there, but by and large, I actually think it's more efficient because you're not having to jet back and forth between coasts or countries and whatnot, and there's just more exposure. So definitely our investor base definitely increased from the perspective of global presence as a result of that. Because before we might not have considered certain investors where we just thought, this is going to be really hard to do, especially given their expectations for like a in-person meeting. Yeah.
It's interesting to hear that you wouldn't kind of consider other investors, in the past. And I've heard that from other startups as well, who've kind of suggested that different types of investors, more specific investors to their needs, start to appear, that, like you say, they never would have happened, I suppose, in the past. I mean, kind of, do you think that's kind of a wider phenomenon beyond your own experience? Do you think that more and more niche investors are starting to be matched with the companies that they're really looking to back?
Almost definitely. I was going to say probably, but I'd say almost definitely. Like I said, things are just more efficient over Zoom, and at the end of the day, entrepreneurs get to optimize more for what they're looking for. Is it cheap capital? Is it value added? Is it really value added? Everyone says they want value added capital. No, we all really just want cheap capital. Let's just be clear about it. But you do want people on the cap table who are who can do stuff eventually, I guess. But there's a whole spectrum of what people really will tolerate and what people want, and you can fill out that spectrum a bit more with a more global access.
Yeah. Obviously, Webit is kind of devised to try and push technology towards a more sustainable, to help the world become more sustainable and more environmentally friendly.
Yep.
With that in mind, can we talk through, I suppose, some of the big innovations that are coming through, maybe again in companies that you're backing that you think really need more VC cash to thrive and are definitely worth supporting as well?
Yeah, I had this bit of an existential wrestling with what to invest in, and I still have that to an extent, to be completely honest, because I mean, there's some stuff that's just really hard, and if you want venture level returns, you probably shouldn't invest in it. Okay, and so I love deep tech. We were my wife and I were just talking about this. It's like, why are you doing all this deep tech stuff? The returns are just, it's so hard. Like what we're doing at Arrivo, really, really tough compared to like the latest fintech SaaS offering. Like it seems like a unicorn is born every 3 minutes. So so there is this struggle between topic and an area. But then there's also this world of like social impact investing, which I think gets derided as just like bad investing. I don't know, in some circles. I think it can be a really great thing, but do you really, like how do you process that? Because it's very different from doing hard things. There's like charities, social impact. There's like deep tech investing, which is really tough, but could have amazing world-changing things. And then there's just regular venture investing, and trying to figure out where one's money should go, whether it's your own or someone else's that you're managing. It's non-trivial. So in terms of specific areas in deep tech, there's incredible innovations in several areas that I've been excited about over the years. So about 5, 6, 7 years ago, I got really excited about alternative proteins, ways we can make food basically from places, whether it's alternative ways of manufacturing protein, through with cells or with plant-based materials, plant-based inputs, or alternative organisms. You've heard about the cricket pizzas and the roach bread and all that, right? And now it's like a thing. Back in 2014, 2013, it was weird. Right now, it's like everyone's like, it's the semiconductors. It's a sleepy area, but boy, it really drives a lot of hardware innovations, which can drive some software innovations as well. Mm-hmm. And so we've been excited about AI chips and just other novel semiconductors for years. And these are things that could really have, especially lower power semiconductors, can have a profound interest in terms of sustainability, because these things drive so much of our lives these days. And if they can consume less power, if they can enable us to consume less power, great, good stuff. And finally, the third area is new materials. Again, these are just like, are you serious? You actually invest in new materials? Yes. And like I said, most of them don't work. But if they do, incredible, So there's those one, so there's I mean, it's our focus has been on in many cases more about atoms than bytes.
Yeah. Again, for you, is it similar kind of similar areas?
Yeah, in my case, so I think there's another thing that the pandemic has done. It has really put more and more focus on this asset class that we're investing in, and more money came in to invest in this area. And I think so. In terms of like looking back a year, year and a half ago, we invest in a lot of areas, but we decided to focus more on healthcare, on fintech, and obviously ESG areas are one of the stronger areas that came out of that. Examples, we invested in Huma in Europe, really bringing DX to healthcare and healthcare research, digital hospitals at the home. We invested in EXO is how you write it, but small but highly capable ultrasound experience. And in fintech, we invested in Arcos Labs, very effective fraud prevention company. And So, these are some of the examples, but we went overweight compared to before the pandemic in both healthcare and fintech. It wasn't just us, but of course, with all the, there's an obvious reason why people put more weight into healthcare with all the changes that's going on in telehealth and whatnot, and as a result of of people going through this experience, there's more people who have more mental health issues, and so that needs to be worked on. People don't go to as many checkups, so new ways of finding cancer also becomes important. There's a whole breadth of things that's going on here, and these are probably one of the core areas that we've put more weight on after the pandemic.
Yeah, and from a consumer's perspective, you're absolutely right to flag up the changes in telehealth, and I suppose how quickly people have adopted to that. But how else can people be made, I suppose, more aware and make these kind of technological innovations more accessible to customers as well? I mean, when you take telehealth has been a success, but can you do that in other industries? And is there kind of maybe a knowledge gap between the consumer and some of the breakthroughs that even say in the likes of deep tech, for example, might not be actually communicating to fill that gap?
Well, we're also in the deep tech world because we're Sony. But I think, what's amazing about these startups is that they make the consumer experience much more easier, and I think that's what we spend a lot of time on, because the adoption is obviously very influenced by how easy it is to use, and of course, tying up with insurance is also a very important component of how this can be so easy to use. I think we see that development and things getting better by the day, and so it continues to be a very exciting area. Now, deep tech, I'm sure Sony would talk a lot about it, but of course, it has a different time length, and we look at in some technologies, we look more past, 5-10 years. Usually, probably the technology may have already been in the works for 10-20 years already, and then we sort of start to come in trying to assess when is the right timing to get in, and so that's also a very challenging area, but it's also, the potential returns can be quite large.
Can I ask, just to bring it back then to, I suppose, the topic of the panel, which is the regional investing, and what we've seen over the last couple of years has just been record levels of investment in all regions beyond the US, essentially. It's just huge amounts of cash going into tech startups to try and stimulate local ecosystems. Can I ask what you both think of what's going to happen over the coming years? I mean, do you see that increase in funding still coming down the track? Is that just going to get further and further? And then also, do you think these ecosystems that are breaking through, are they going to mimic what the US did, or are they going to become their own things, do you think?
Tony, do you want to start?
Yeah, go ahead. I'll follow you lead.
So I think, there's a couple of things. I run a global team out from Tokyo, but I think it's fair to say that the US remains the center of innovation, and there's so many things that come out, new ideas that are born in the US. And of course, China, with its so strong, the time to build scale is just amazing in China. But I think it's been proven that startups can come from anywhere in the world, and that they can do business in various different areas. So maybe a small example is, Japan's ecosystem is still very small, but it has grown 7 to 8 times in the last 5-6 years, and so that's an area that's, there's certainly significant growth going on there. We're actually quite fascinated by what's going on in India. And as you see, there's, as they recover from the pandemic, the types of the types of growth that they're seeing and the opportunities they're seeing there is quite immense. So I mean, we can just go on and talk about the subject, but I think what we try to be careful of is that, at the end of the day, these are startups, and these are companies you want to spend time on together, and so to really try to see how Sony can help, and as the investor, how we can help. So I mean, we try to invest in areas where we have somebody on the ground, and we try to be very careful when in countries or regions where we don't have anybody on the ground.
And for you, Sonny, is those sentiments something you'd agree with?
Yeah, the way I've been characterizing, or at least the way the view that I've been forming around, what's going to happen in the coming years, what the world is going to be like in the post-pandemic world, blah blah blah, is it really does feel like it is becoming a multipolar world. Especially in the tech world. It used to be, it's US versus China. I'm like, yeah, that's kind of true. Maybe traded militarily and whatnot, but from a tech perspective, it does feel like a multipolar world. Like Tel Aviv is just as innovative as, well, maybe more so, certainly on a density basis, the most innovative actually in many cases. Yes, Beijing's great. Silicon Valley's great, and then there's a bunch of little poles popping up, London, for stuff, and Berlin, and and various other places, Boston, Tokyo, perhaps. So, but the other aspect is, I don't know if there is the post-pandemic world. Maybe as a post-pandemic starting of the pandemic world, but COVID is going to be endemic into our lives, I believe. And so it's going to be really interesting. Trade wars, multipolar tech innovation, and COVID endemic world. That's the decade of that's the 2020s for us, right? And so what we make of it as consumers, as investors, as entrepreneurs, I think it's going to be fascinating. I'm pretty sure we're going to look back 30 years from now and say, man, that was a crazy decade that we really went through. I mean, some decades, there's going to be stuff happening in every decade, right? But the 2020s really, boy, what a way to start it with a pandemic, right? And but I think us humans are resilient and adaptive, and we're gonna come up with some good stuff. And I'm very optimistic about the vertical transformation that can happen with technology. I really believe that the vertical progress of humans will be can be heavily driven by technology, and by the way, post climate change aware world as well. Let's throw that in as well, right? And I don't know. We're going to adapt to that, and I think with technology, we're going to solve a lot of these problems. Technology will also create a bunch of problems, and hopefully we'll have the ethical maturity to be able to deal with it. So that I think that's going to make an interesting decade for us to live in, and certainly for our children to live in.
Most definitely. I'm slightly cognizant of time, so I'll try and do this quite quickly. But to have like you mentioned, Sonny, these new poles of innovation popping up all over the world. I mean, it's basically, well, the hope is that it might undo some of the singularity of thought that comes out of, say, a Silicon Valley tech hub, that now tech is not just emerging from there, it's emerging from regions all across the world. And two things: do you think it will speed up the pace of innovation, but also, I suppose, the creativity and the differing types of innovation as well?
So
Yeah.
Oh,
That's good.
yes.
No, go ahead, please.
Yeah. So, I mean, I think what we've really been witnessing that the areas that of innovation is continuing to expand, and I think is global and you know, of course, there's the vertical aspect, but there's also a very strong regional aspect, and where some successes in certain regions are recreated in other regions, and you know, that's just like buy now, pay later is everywhere in the world now. And you know, I mean, some people talked about there may be some small things in Australia, but you know, that's the world has, I mean, taken that and it's happening. So that's something that we'll continue to see. And I think, you know, I think we'll see. We're putting a lot of effort into ESG related discussions, and we've invested in companies that make, you know, like leaves and stems into biofuels and green chemicals. But that area, I think, you know, technology is just going to continue to drive in a pretty immense way.
And for you, Sonny, as well?
Yeah, I mean, like I said, there's hard stuff and then there's profitable stuff, and there's going to be a whole mix of that. And I hope that you know, the allure of fast and easy money doesn't stop people from working on the hard problems that really will drive humanity forward. New fuels, new materials, new ways of finding new places for food. Money shuffling is fine, you know. I'm going to put part of my portfolio into that. Okay, get the returns that people need, the venture level returns. But I do hope that we will find ways to move people around, feed people, and clothe people cheaper, faster, and easier. So, yeah.
And with that, unfortunately, that's all the time that we have. I'm so grateful for the chat with you both. It could have gone on for a lot longer. Sonny Vu, founder of Alabaster and also CEO of Arvio, and Gen Tsuchikawa, corporate vice president at Sony and head of their VC activity division. Thank you both so much for your time. It's been an absolute pleasure. All the best.